Hello, this is the 9th of September 2014. I'm doing a Nifty video after quite some time. So I'm going to be going over just the medium term counts that we've considered so far and then look at exactly what is happening in the very short term. Essentially what I've done is I've marked this as 1, 2, and we've been in an ongoing third wave. At some point we are trying to consider that the third wave was coming to an end. The first wave and the third wave almost were equal in size, close to the 7400 mark. And after that it started extending, which is why in the June and July long short reports I was actually looking at extending up to 1.618, which was close to 8400. But as stocks started giving up in July and August, I too changed my opinion about getting that far. But so far we've come to close to 8200, which is still a bit short of the 1.618 target range. In the interim, what we are seeing is that this third wave itself is now started to develop as an impulse in itself. In my previous intraday updates, what we were looking for is the third wave coming to an end. At one point I was considering this as a fourth wave triangle and the fifth wave of this structure ending something, initially an ending diagonal and then this way, and then later we looked at a potential ending diagonal for this entire structure. And therefore in the last week of August I had a target that the index would do 7880 in wave E of the triangle, and then we eventually went above that level. So when we went above that level, what I considered is that the third wave probably ended here. It did not extend up to the 1.618 mark, and this entire sideways structure is a diamond. The reason to consider that is that all the internal patterns here have been corrective in nature, and the last pattern is a triangle, and usually in complex corrections triangle is what you get in the last structure, either in wave Z or wave E, and that usually is the last part of a corrective structure. So essentially this expanding triangle here is where the fourth wave would have ended, and then all the three wave patterns that occurred prior to that fit best in what looks like a running diamond correction pattern, and therefore I've taken the entire fourth wave to be a diamond, and we've therefore started the fifth wave up. Now when you look at this structure, then the fifth wave would either truncate or would extend. Okay, an extended fifth wave, I mean, even if the fifth wave was equal to wave 1, it would mean that it has to go all the way to 8700. So that's a long way up. If we go to the upper end of the channel, it goes close to around 8350. But that brings us down to counting the internal subdivisions here and whether we've completed a 5-wave advance. And then again, we've seen that we've seen quite extended rallies in wave 1 and wave 3. So at each stage we'll have to consider both whether fifth can end or whether it can further extend. Now so far the pattern that has occurred for the last couple of weeks, we are able to count the initial waves, wave 1 and 2, and we should have started the third. It's possible if we want to truncate a 5-wave that we simply do 4, 5 and end it over here, where the third is shorter than the first and the fifth is still shorter, in which case we would start expecting a top, but this would end up being a truncated scenario where the fifth wave does not even equal the size of the first wave. Now based on a simple ratio structure which I've explained in one of my earlier videos, if you just measure the entire distance from wave point, the starting point to the end of the third wave, truncated waves often will end at around 38% of that. 0.38 projected from the low point of the fourth wave, which is around here, gives us somewhat a target of around 8190, 8180, which is just below the recent high of that we made. We made an 8180 high, and this level comes at around 8193. So this is where you expect a truncated fifth wave, and if the fifth if it were to actually extend beyond this range is when we would start expecting much higher targets, all the way to 86, 8700 would become possible. So what we are going to be considering over the next couple of days is going to be whether wave 5 ended here, or whether this is just wave 1 of 5. If wave 5 ended, then we should get a major top and a significant correction, Weekly indicators have been in sell mode, which is what I've been showing for some time, and typically when that happens and there's a negative divergence, you go right back to do the entire correction, but not you're unable to go above the upper Bollinger Band on the weekly, which I've been saying is close to 80 to 30, and so far we've not gone above 81.80. So 80 to 30 was the upper side limit based on the weekly bands, 81.90 based on truncation of the fifth wave. And therefore, if we are still in the fifth wave, we could correct in wave 2 of 5 and continue to do extend to higher targets. But once we are able to see initial impulses on the way down and set lower targets below the averages, is when we would get a further confirmation that the fifth wave is over and that we are in for a deeper correction. One of the levels to watch could be this channel trend line. The channel trend line would come in closer to around 78.80. Which is a little below the 20 DMA, which is at around 79.30. So 78.80 might be a good level to watch for an overall medium term reversal. And in the short term, till we are below the 81.80 high, we've completed an initial 5-wave structure today. For those looking at hourly charts, you will recall that I did raise an issue with the hourly charts, and I was not able to count an impulse in the initial leg, which I've marked as 1 and 2 on the daily, and which is why last week I was considering the possibility of having completed the fifth at the 81.40 high itself. So far today, we've in the last 2 days, while the market has gone above that level, we haven't got a 5-wave structure. In other words, the rise so far to the high of 81.80 actually looks like a 3-wave. So it's very much possible that we are developing an expanded flat, which means this is wave A and this is wave B, and wave C of that expanded flat then has a target of around 8020. And if we don't go below the 8020 or 8000 mark, then it's very much possible that we just subdivided wave 1 of 5 and wave 2 of 5 close to 8000 and start heading higher again. So I think the 8000 mark, which is where you have maximum put open interest, would be a key support to watch over the next couple of days when there is a correction. And we would then only below that look for something bigger developing, but that I think is the minimum expectation, which would get further confirmed when you break the 8133 swing low that was made intraday yesterday, because once you break that swing low, it would confirm this rise to be 3 waves, and then the expectation for an expanded flat down to 8020 would be set as an initial target. That's all in this update for today. Thank you.